So, Ira, there's clearly a range of views on whether the U.S. economy makes a soft landing, a softish landing, or a hard landing. We're just talking to Nathan Sheets of Citi, who says he is on team recession, although not a hardcore recession. Yet, when you look at market pricing, most traders believe a bond rally will happen. How does that work across all those different economic scenarios?
Well, I think there's a lot of different pieces to what you just said, and certainly we've had a very significant bull rally in the Treasury market over the last 6-7 weeks, and because of that, will it fizzle out in the near term? I think that that's very possible, particularly if Jay Powell tomorrow is a little bit more on the hawkish side than dovish. So if it's another hawkish pause, or he stays relatively neutral, then you could certainly see, I think, Treasury traders and Treasury investors kind of sit on their hands and sit pat. So it's not unusual to have these large moves, 80, 90, 100 basis point moves in the Treasury market, and then have consolidation over a matter of months before you get more data, another Fed meeting that ultimately moves the market out of that range.
Why is it that traders don't believe the Fed when it keeps hammering on about how it wants to keep rates higher for longer?
Yeah, that's an interesting question. I think a big part of that is risk management, right? So the risk is that the next move is going to be a cut. It's just a matter of when and how aggressive that will be. And there's this narrative out there, I think, that the economy maybe isn't as good, and it seems like the market often extrapolates from one or two data points and then just draws a straight line and says we're going to keep going in that direction for forever. And obviously that's never the case, right? There's always bounces and counter trends within that. So the market does think that the Fed's going to be more dovish than I certainly think they're going to be. Pricing in 114 basis points or so of cuts over the course of the next year, and will we see them potentially? But my base case scenario is that we're going to see less than that. But that's also what makes markets, right? Yeah. So there's certainly people that think the Fed's going to do nothing next year. Other people think they're going to cut 200 basis points.
Does the bond market, though, still have that power? I mean, we always think back to the original taper tantrum, and then I guess the taper tantrum redux in 2018 here. And I'm just wondering, have things changed so much? And more importantly, has there become so much dispersion in that Treasury space where bond investors aren't going to have as much sway over the Fed?
Well, I think the Fed doesn't necessarily do what the bond market is priced, and we've seen that before, right? They did that even in the summer of 2022 when they hiked interest rates 75 basis points over the course of 4 meetings instead of only the 50 basis point hikes that were being priced into the market. So the Federal Reserve can control interest rates. That's what they do, right? They can control those very short-term interest rates, and I think that if in fact the Federal Reserve isn't going to cut or doesn't think it's going to cut 100 basis points or more next year, then Jay Powell has the ability to push back against that.